This is the briefing for Friday, June 14th. Very interesting week this week in the stock indices, and there are two important aspects of the development of price and in the structure of that development that I'm going to cover tonight, and I think they're very, very important. The result of them could be the potential for some type of a warning flag that the market is giving us of potential road hazards coming up in the future. Now, the first one I want to talk about is what's happening from an internal perspective. Now, basically, this is a 60-minute chart of the spiders, the Qs, and the Russell meeting the IWM. So you can see that as we came into this high, this was the high of Wednesday, this is Thursday's trading, and this is today's trading. So you can see volume is falling off, and typical for it to fall off during a rotational period. But look what's happening with market breadth. Market breadth is declining pretty dramatically. The same thing with the Qs and the same thing with the Russell. So basically we have internals that are telling us that the market, even though in a rotational pattern for the spiders, is weakening from an internal perspective. More concerning is what's happening with the NASDAQ, and you can see this move higher over the last 3 days of trading, volume falling off, breadth falling off as well. Intermarket divergence is the second aspect that I'm seeing now, and that is the fact that you can see this move here in the spiders and the Qs. Look what's happening with the Russell. The Russell is absolutely tanking. Breadth in the Russell is confirming this move, so it does suggest the potential that we're seeing some type of intermarket divergence that could be a warning flag for the current rally that we're seeing. Now, intermarket divergences are very difficult to understand how they rectify themselves because we never know which index or indices are correct, but it's important to understand that they do signal that there's some type of divergence within the market itself. Now I'm going to change to another chart here. This is the diamonds that represents the Dow Industrials. This is the IYT, which represents the transports. Look at what's happening with the Dow Industrials and look at what's happening with the transports. So basically, we have a really pretty good severe divergence, meaning the Russell, the Dow Industrials, and the Dow Transports are selling off and selling off pretty significantly, but the S&P and the NASDAQ are moving higher. S&P not necessarily moving higher, but certainly this is a pretty significant event. Now, based on that, we have to kind of look and say, okay, what's going on? Why is there a difference here? Why is there an intermarket divergence? Well, if we look at where we are in terms of the market, we have to assume potentially that there is something else that is affecting the NASDAQ and the S&Ps. And that basically is the fact that there are higher weighted stocks within the S&Ps and in the NASDAQ, and there are lower weighted stocks. So higher weighted stocks, especially a stock like Nvidia, can make the market move higher, or make the index, I should say, trade higher as it trades higher. And if it were not that way, then it would suggest then that there is something else going on, and we're going to see some type of potential counter trend rotation. Now, this is the spiders, and you can see the rotational pattern right there. This is a weighted index. This is the S&P 500 ETF that is an unweighted ETF. So you can see that this is pretty good proof. This is unweighted. This is what's happening within the index itself, but this is the weighted. This is the weighted NASDAQ in the Qs. This is the unweighted NASDAQ in the Qs. So it's pretty significant that we're seeing the majority of stocks are now beginning to trade lower as opposed to higher. Yet the weighted stocks are holding the indices up, at least at this point in time. So what we're looking at right now, you can see 3 days, this is the spiders on a daily basis, 3 days of rotation. What's important to this coming week, or next week I should say, is this low, which was yesterday, comes in right around the 539, 540 area. Significant to that also is the high of Wednesday, which comes in right around the 544 area. So that area of rotation is extremely important. Now, it is often that higher weighted stocks will drive the value of an index higher, but if the majority of stocks begin to trade lower and they continue that trend, they eventually weigh on the higher weighted stocks, and in that case we're going to see some type of a rotation back to the downside. Watch this area next week very, very carefully. If that's broken, and especially if this gap gets closed, then the next level of support is going to come in right around 530, and below that it's going to be this 525 area. That's an extremely important area of 525. If that's broken, it opens up rotation back through this area through here. And especially this buying candle here and this buying candle there on those days, if those are not defended when 525 is broken, you potentially could see an acceleration of price through this area and then down to potentially test the 490 area. Volume fell off today, but breadth was fairly weak. So really, from an internal perspective, this was a very weak day in terms of the spiders. Looking at the Qs, you can see the same thing. We put in a higher high, volume falling off, volumes diverging pretty dramatically, and that potentially has to do with the fact that it's only a few stocks that are carrying the NASDAQ higher. Breadth significantly lower, 1,857 shares negative by the end of the day. And looking at the Russell has now closed below 200. This buying tail was not defended today, so that suggests that we're going to see potential follow through. Now, when I say that, markets never run in a straight line. They run and pause and run and pause. So we could see potential for a move back to this area right around the 190 area, 190 to 191 area before this is over. Now, if we did reach a point of being extremely oversold in today's trading, not so much in the NYSE, but NASDAQ looks like it's extremely oversold. And this is another example of how just a few stocks are holding the indices higher, but the majority of stocks are beginning to trade lower. So this would suggest the potential. It does not preclude the market from going lower on Monday, but it does suggest the potential for some type of pause or some type of rotation. Now, we did get a pause for most of the day today after the initial move, so it's going to be interesting to see what happens on Monday to see if we do get an additional move to the downside or we get some type of rotation back up to correct the pretty substantial move we've seen in the three indices, the transports, the industrials, and the Russell, that declined over this week. Total volume in the NYSE dropped slightly. Total volume in the NASDAQ dropped slightly also, back within its typical range. There was just a lot of volume in the NASDAQ over the past 2 weeks, probably mainly attributed to NVIDIA and some of the other Magnificent Seven stocks. Now, also looking at where we are in terms of the percentage of stocks above the 50 and 200-day moving averages, this is the S&Ps. You can see that the decline that's been going on, the number of stocks above their 50-day moving average in the S&Ps has declined pretty significantly, and the number of stocks above their 200-day moving average has declined also. It's another example of the interior deterioration of what's happening from a structural perspective with the indices, at least at this point in time. This is the NASDAQ percentage of stocks above their 50-day moving average and their 200-day moving average. And you can see that this is a continuation of a deterioration. And finally, in the Russell, we have exactly the same thing. And you can see the deterioration that's occurred. Looking back at the S&Ps, look at this divergence. You can see the trend is down in the number of stocks above their 50-day moving average while price is moving higher. It's unsustainable. Same thing with the NASDAQ. Trend in price is up. Trend in stocks above their 50-day moving average is down. And in the Russell has paused for several weeks here, but still it is deteriorating from an internal perspective. So basically next week I think is going to be a very, very important week in the indices. And if you're long the trend in price in the NASDAQ and in the S&Ps is up, but from an internal perspective and from an intermarket perspective, I think there are some severe warning flags that the market is telling us right now. Those can change, and the internals can change to support price. But right now, I would be very, very cautious in my long positions. And as I'm looking for signals to be shorting this market. Should we begin to trade through short-term support levels, which would lead to intermediate-term support levels, and then into longer-term support levels. Most important, I would watch especially what happens at this 525 area for the spiders. That's a really critical area, and these buying tails, if they don't get defended, should we see a price turn down. Going to be an interesting week next week. Have a great weekend, and I'll pick this back up on Monday for subscribers.